Jason here. Welcome to another Wealth Coffee Chat. Good to see you guys this morning. What is it today? Thursday, the 9th of September. Hopefully everyone is awesome and well. While the old Facebook Live and YouTube Live is warming up, I'll do some quick intros and say good morning. Always a big welcome to the regulars returning to Wealth Coffee Chats. Something that I've been doing for maybe almost 2 years now, which is awesome. Really enjoying catching up with you guys in the morning, usually around about 8:05. And we sort of have a bit of a yarn about property investing. As you guys know, the regulars like Nick and Alison, there's a lot of moving parts to investing in real estate, and you've got to stay on top of those, which is always important to get the hang of and keep it rolling. The two Alisons there. Good morning, DJ and Laura. And we've got a Facebook user there. One of you guys are dialing in from the Facebook group, so that's fantastic. Good to see you. Welcome along, Hardik and Natando and James. Great to see all of you guys here this morning. The regulars are in the house. So fantastic to have you with us as always. For anyone who is new, if you're new, give us a shout out in the chat. Say good day. If you're shy, don't worry. It's a friendly place. Say new or in the chat, or and let us know where you're from. Jason Witten's my name, as it said there on the screen, and been property investing over 20 years, helping property investors successfully navigate a long-term buy and hold investment concept. If you're new here, you'll hear this all the time. Buy well, never sell. This thing is a marathon, not a sprint. It takes time to create an excellent portfolio, and there's a bunch of little tweaks and turns and things that happen along the way, and that's what we do here at Positive Real Estate. We run a coaching and mentoring program. I'm one of the founders. We've been doing that for since 2003. What's that, 18 years, 19 years? Coaching Australians and New Zealanders and Zers for a bunch of time, and we've done a few deals, over 6,000. Along the way, we've learnt a few things that we have, and each morning we get together, share a little bit of wisdom right here on Wealth Coffee Chats. Today, I wanted to talk to you about lending and loans. It's quite positive news out there. I don't know if you guys watch any of this stuff. It's industry stuff for me. I watch it all the time. There's positive news. Hey, lending volumes at record highs. Banks open for business, etc., etc. And hey, good morning, all of you guys, whoever that is. A couple of people in the Facebook group there. Sadly, unfortunately, the names don't pop up. Anyway, but team, we're like, this is great. We've got markets moving our way. We've got opportunities. All right, let's get some finance. Let's get some money. Give me some money, banks. And sadly, for many of us as property investors, things take a little bit more finessing, and sometimes we're left wondering why. So today I wanted to sort of dive into this, not in extreme detail, but a bit more of an overview of what's going on, right? So there's two parts to the lending process. Now, there's two parties that need to be approved for a loan. So for you guys sitting there right now on this morning's live, like Aaron, good morning, Aaron. If you're sitting there right now and going, what does he mean by two parties need to be approved for a loan? Chuck it in the chat. Tell me the two parties, the two entities, the two things that need to be approved for you to get a loan. And I gave one away just there, but just let me know if you think you know what they are. There's two bits that will be analysed to get an ultimate approval and settle and own a piece of real estate. Chuck that in the chat there if you think you know what it is. We'll have a quick sip of my coffee. And there's Teresa. Good morning, Teresa. Good to see you there. Hopefully all of you guys have got a nice little warm coffee. Matt's talking about servicing and loan to value ratios. Yes, that's part of the machinations, Matt, of the lending process. But I'm talking about Brusselton. Hey, Paul. G'day, mate. How are you? Awesome to have you online today, mate. Thanks for dialing in. Majib says lending, LVRs and borrowing, a deposit, seller and finance, the financials, and the property valuation. There you go. Alison. Alison is the closest to this. There's two parts. Team, there is... Oh, that's a bit skinny. Let me do this. There's two parts to getting an approval. You, the person, now, again, that's a terrible drawing, but don't hold that against me. The person, the individual, the human, who's lending the money, the physical person, going for the money. And a bunch of you guys in there were talking about this. Majib was talking about loan to value ratios and borrowing and servicing ratios and LVRs from Matt, credit scores, serviceability, bank's policy, etc., etc. So absolutely, these things apply across a bunch of these things. But the second party, the second entity, the second thing that actually has to be approved to get a loan is actually the property. So the property has to be approved, okay? And there's a pretty average drawing of a house as well. So there's two parts to getting the approval in this process, and I wanted to talk to you guys about that today when we think about lending and getting money, because we can look good and sometimes the property that we choose won't be accepted by the lenders. So let's just talk about all the other way around. The property's fantastic, but you're not looking so great, right? So let's have a bit of a dive into that today when we're having a look at, all right, what is it going on with us and the world of lending and property? Obviously, many of you guys were talking about these things right here. We're talking about your credit score, okay? Credit score, your credit score, your servicing. So your servicing is how much income do you have in your world that you can bring into your world? What's the cost of your expenses to live and get by, and can you afford to pay more for another piece of real estate? Servicing, deposits, okay? Deposits. Now, the interesting thing is with you as a borrower is if you put more money into a deal, which was another one here when we were talking about the loan to value ratio. If you put more money into a deal, it's actually easier to borrow. So the more money you put in, the less resistance you get from the lenders because they have more risk buffer in the deal, okay, as we go, and so on, okay? Now, we'll talk about the lenders in a minute because they also are a bit of a party, but they are a party to both pieces, okay? These two pieces are analysed separately, but they roll up to the banks, and who said it before? Karen Buxton said it before. The banks and the lenders' policies and the lenders' mortgage insurance policies. So we'll talk about those two as part of this mix in a second as well. So your ability to borrow, you as a person, your credit score, your servicing, your deposits, the loan to value ratio you want to borrow at. If you want to borrow at 95%, or you're happy to borrow at 80%, we've all chatted about this in the beginning. As a property investor, you should be pushing to borrow at 90% interest only for 3 to 5 years. We've talked about that. That's not what that's about today. Excuse me. As we go along in this sort of section. The other one is and it comes up here anyway, so your income. So are you employed or are you self-employed? These are the things, and there's a bunch of other smaller, more detailed things in that mix, But this is the drill. Are you a good risk to lend some money to? Can you afford it? What deposits have you got? What are you looking to borrow? And what is your circumstance in life, okay, as we go. Unfortunately, fortunately, depending on which way you look at it, depending on which side of the coin you're on here, if you're self-employed, it's a bit more difficult to lend. You end up having less choices. But the good part about Australia is that we have many lenders, not only banks, but many lenders to go to get some money. I don't know if you guys know this, but there is 119 licensed Rigididge, not the bikies, licensed Rigididge institutions we can go to in Australia to ask, hey, do I, the individual, fit your lending policies, and can you lend me some money? Everyone cool with that? Yeah, that's right, Matt. The APRA, Carry On Malarkey, the Haynes Royal Commission, etc., caused a lot of grief, caused a lot of friction in the lending world, okay? For all of us, we need to make sure we understand how and what we look like to the lenders to get the most out of where we are. So everyone gets this. There's you. You get approved, okay? Yep, Jace, Pepper, Resimac, like there's all sorts of good stuff in there in our lending choices. So there's you, and there's plenty of choices when it comes to the lenders. So let's go over here and have a look at the property when it comes to lending, okay? So what do you mean by the property, Jason? Well, team, there's a few things that the lenders will look at. Okay, number one, look at the location of the property, okay? So the location usually is done by postcodes, okay? So I don't know if you guys realize this or understand, but the lenders will have, there are, in every bank and financial institution, there are blacklisted postcodes and postcode restrictions on lending in those areas. Now, there doesn't seem to be much in the way of the science to that or the sensibility to it, but the majority of restrictions are around two things. The CBD postcodes in Australia, the CBD, okay? We've talked about this before, team. If there is a 000 postcode in the property that you're looking to buy, it will have restrictions and challenges and problems with lending every day of the week. So, you know, a 2,000, a 3,000, a 4,000, I don't know if there's a 5,000, 6,000, whatever those postcodes are, right? CBDs, do not, it's a big no-no for me. Do not buy in a CBD postcode or a CBD location. One of the main reasons for that, because of these restrictions, is because in CBD locations, the supply mechanisms, the ability to put real estate into the market in a CBD is almost endless, okay, team? And what actually creates or forces value in a suburb is when the suburb gets limited. So it gets limited is one of the major factors, which means you can't build any more houses there. You can't build any more apartments there. It's not being rezoned is one of the factors. And then the other factor is it attractive to live there, okay? And that's not what today's about. But CBDs, you can put up a building with 1,000 apartments. Well, it doesn't take overnight, but the restrictions in the CBD postcodes are very little in supply compared to NIMBY suburbs. Sam talks about this all the time. Not my backyard, NIMBY suburbs, okay? So think about that. Postcode restrictions. The property, you're approved for a loan. You go, all right, I can buy 600,000. You got a big tick in the box here. Tick. That's a terrible tick, isn't it? Tick. I'm approved for 600K. And then you go, I want to buy a property in the CBD for $600,000, and you were considering putting 100K in the deal because that's all you had as your deposit. And over here, they say, yep, no problems. If you're going to buy in that location, well, and over here, you're looking at, a 3% interest rate. If you're going to buy in that location, well, no problems. We want a 30% deposit, plus we're going to charge you 5% interest for our risk if you got the loan in the first place for that property. Everyone following along? So you and then the property, okay, as we go along. Other issues over here is the type of property that you're lending on, and what that might be. Okay, the type of property. Let's have a look. Type. Okay, so is it an existing property? Is it an off-the-plan property? Or is it a house and land property? Okay, a house and land, all right? So those types are fairly simple. It's irrelevant. It's completely irrelevant, team, whether they're townhouses, apartments, or houses, okay? Just so you guys know, it's a postcode restriction, not, they don't lend so much on apartments, okay? That's rubbish. If anyone tells you that, they don't know what they're doing. They're talking out their ass, okay? So is the property existing, okay? So often we find the lending on an existing property seems to be a little bit easier because it's there. The valuer can go there tomorrow and you can get a loan on that property. Fairly simple because everyone kind of knows what they're in for, okay? Now, that doesn't mean that existing's better. That's just saying existing has a simpler path to the outcome of the plan. No lender will give you an approval for more than 3 months. So if you've got it off the plan for 12 or 18 months, well, things could change in the meantime, okay? So that's where the property, you might be approved here for 600, but that gets past 3 months, well, you have to wait again to see if they're going to give you the approval. It's not a big deal. We've done thousands and thousands of off-the-plan deals. There are some things you have to manage. A little bit croaky today, gang. There are some things you have to manage, but it's fairly straightforward if you know what you're doing. For those who don't, it can be an absolute disaster and nightmare, okay? And house and land, construction deals. Get yourself a piece of land and then build yourself a house, okay? The type of property deal you're doing. And the other one here that can give you a little bit of grief is the add value deals, okay? So let me do this actually. So they're the type of deals, those ones, and they can bring some issues. And the second one is the style of deal, okay? So let's have a look at this. Is it a high cash flow deal? Is it an add value deal? Usually the two styles we look at that can cause some issues. What do I mean by that? NDIS, right? NDIS at the moment is an attractive deal. You can build a house, you can get multiple incomes, you can get good cash flow. The challenge is with that NDIS cash flow style deal, the lenders are like, yeah, mate, 80% if you're lucky, maybe 70%. We're going to charge you a high interest rate because we think it's commercial lending, higher risk, etc., etc. Okay? Add value deal. I'm going to do a duplex. I'm going to build a block of three apartments. Well, you're getting into the zone where the lending becomes restricted, okay? 80% if you're lucky, maybe 70% because you're now becoming a quasi-small developer, okay? So you're approved for 600, you go to buy an NDIS deal, and they change the deposit and the interest rate, okay? Everyone cool with that? And they'll probably charge you, even at a 70% or 80% loan, they'll charge you lender's mortgage insurance as well. Okay, they can make up the rules as they go along. Okay, unfortunately, that's not true. They're not making it up as they go along. They've already pre-done these rules for this type of deal, and it has to fit in a box. Okay, as you go. So think about that, team. Now, that's not an exhaustive list. That's just giving you an overview, hopefully, about this lending process. There is 2 parts to it. Don't get confused that you as the individual are all proved and ready to go. You're like, you beauty, I'm out there, I'm armed, I'm dangerous, I've got coin, I'm flush, I'm ready to roll. And then you come over here and you try and buy an NDIS deal and it all falls apart for you. Or you thought you would buy an apartment in the city and rent it out for short-term accommodation because that's a great idea, and it comes apart. Have a think about that stuff as you go along. Okay, so the point is, team, it's a little bit more complicated than we would like it, and then when now you get now you're now on property, 2 and 3 and 4 and 5. All of these moving pieces become more and more important to get there as you go along. So there you go, team. That's it. Wealth Coffee Chat done for today. Hopefully that made sense. Hopefully I haven't got the Rona, Jace. My kids have been all fluey all week, the little buggers. They're like little disease machines, right? Parents know what I'm talking about here. You used to be a very healthy adult, and then you have children, and then you're sick all the time. There you go. Awesome. All right, gang. Well, listen, you guys take care. Yeah, Alison, listen, they're still doing 90% lending. That's awesome. Matter of fact, it's gotten a little bit easier of late to get 90% interest-only lending, which is awesome. So dive in while you can, team, and go for it. And away we go. Hey, Jeff, mate, I've got you on my list to give you a call, mate. Yes. Sorry, I missed you this week on that one. And all good. All right, gang, well, that's it. I'm just rabbiting on now. It's 8:30. We're done and dusted. Wealth Coffee Chat done. Hopefully that made sense today. But yeah, it's not as simple as it seems. Get some coaching, get some support around that if you're struggling or you want to really understand it a little bit more and get to the bottom of it. So, all right, team, take care. You guys be awesome. That's it. We're done. Bye for now. See you tomorrow. Tomorrow, 8:05-ish, roundabout. Hopefully.